This is why your trades could be better if you change the time of day you trade. Hopping straight into the charts, I can show you exactly what I mean by this. Now, when trading, you've got four specific time zones. You've got the London time zone, the New York time zone, the Asian time zone, and the Australian time zone. Now, wherever in the world you live, it's best to trade in your own time zone because that'll make it easier for you. However, if you live in Asia or in Australia, I'm afraid to tell you it's more profitable to trade in the New York or the London session. Let me show you why. Let's pull up a quick sessions indicator so you can see what I mean. Now here on my chart you can see a few coloured boxes. You've got a green, an orange and a red. Now these coloured boxes represent a time zone. The green time zone is the London time zone, which opens at 8 AM in the morning. The red shaded square is the New York time zone, which closes at 11 o'clock in the evening in the UK. Now the orange shaded box in the middle is where they both overlap. This is where London and New York are both open at the same time, because the London session closes at about 4:30 in the afternoon and the New York session opens at around 1 o'clock in the afternoon. You have a 3 to 4 hour window where volatility is going to be at its highest. This is because London and New York banks are open at the same time, meaning they're both trading currencies at the same time. Now let me add one more shaded box to the market so you can see exactly what I mean when I say Asia has very low volatility. Now these blue shaded rectangles are the Asian markets. As you can see here, the Asian market doesn't have a lot of volatility, meaning the prices don't move much during the Asian market. Whereas in the London market, the price starts to move a lot more and it's more drastic. And same goes with the New York market and in between. Now the reason you should be trading in the London and New York market is purely for that. It's for the volatility you have in the London and New York market that you simply don't have in the Australian and your Asian markets. Now let's move on to liquidity, which is what I spoke about in this previous episode, so you already know what it means. Liquidity is the highest. Normally a market opens, so when a market closes and the next opens, and during market overlaps between the London and New York session. This is when liquidity is at its highest, meaning you can buy and sell pretty easily without any price discrepancies. This means you can buy and sell your trade without any price discrepancies, and that goes the same with volatility. Volatility tends to spike in the first few minutes of market open. As you can see in this section here, price goes from not moving much, in fact it's in a small downtrend, to a quick spike up and a push down here. Now if you take a look at each time zone, they have all their own characteristics. And what I'm going to ask from you to do is to go on your own chart, use this indicator, which I'll now pull up so you can screenshot, and try to see for yourself the different characteristics each market has. Now the indicator is called Sessions Asia London New York Coloured, used for GMT +2. This is good for if you're in the UK. If not, you can always change the time in the settings. It's made by Vedas.Malzi. These are the settings I normally use. I get rid of the Asian time zone as I don't normally trade there, so I really want to focus on the London and New York time zones. Perfect. Now let me show you a little bit about the characteristics I was just talking about. Let's start off with the Asian markets, which are this bit which isn't shaded here. Now the Asian markets have very low volatility. This could be good for rage-bound trading. A rage-bound trade means you're using very tight stop losses as the price isn't likely to break any support or resistance zones, as it just doesn't have the power to. Whereas the London session, also known as the European session, has very high volatility, as London is the global financial hub for trading. Trading in the London session is very good for looking for reversal patterns, any breakout strategies. Those will work well in the London session. The New York session is always going to be very volatile, especially in the London and New York overlap. This is when both markets are trading at the same time, causing a lot of fluctuation in the markets. Trading close to the New York close could be very dangerous, as there just isn't the volatility, as everything's now closing down for the day and going into the Asian market session. Now, having multiple strategies can mean you can benefit in any market you trade in. If you're a scalper trade, you may benefit by trading the overlap between London and New York, as the price is swinging very quickly. Whereas if you're a swing trader, you might prefer the quieter market to the Asian market, because it moves a lot slower, meaning you're not as likely to be stopped out for no reason. Another thing to bear in mind is news. When trading, the London, the overlap, and the New York session normally have a lot of news releases because that's when most of the world is trading. Now, with behavioural patterns, you can see the different patterns between the Asian session and the London and New York session. Let's dive into them a bit more. Early in the day, institutions normally adjust their position sizes to buy or sell more of what they're holding. So this is normally when you see the highest volatility, as I said earlier. So as you can see here, once again, at the beginning of the London session, you've got a spike in price. And same thing in the beginning of the New York session. Now this isn't just for this one time frame, you can go back and see for yourself. Here in market open, you can see the price spiked up quickly and then followed down. And as soon as the London and New York session overlapped, you can see a big spike in the downtrend. Let's go back even further. Here you can see not a lot of movement in the Asian session. It's still moving, however not as quickly as London and New York sessions would. Going back to this one, you can see it's even more obvious the volatility discrepancy. When London opens, you can see a big spike, followed by even harder spikes. Then in between the London and New York session, you can see a big bearish spike here. This is all to do with volatility, with big institutional banks being open and trading in those hours. And also, the news affects this a lot. This could well be news that came out in London that made the euro stronger, and then some more news that came out later in the day to do with the New York Open pushed the price of euro back down, or more likely increase the price of the dollar, making it more even between the euro and the US dollar. Now, the reason I like trading between the London and New York session is to avoid these times of low market volatility. Trading in the Asian session could lead to having larger spreads, meaning your trade doesn't execute at the correct level. It will have slow execution times, once again pushing that price of yours even further. Now you can spot the different time zones. I'm going to go delve deeper into it and show you when you don't want to trade. As I said previously, I don't trade the Asian session purely for low volatility and low liquidity. However, I also said I don't trade past 4 p.m. GMT time. In this chart here, you can see I've added the yellow line at 4:05, around 4 o'clock. Here you can see a lot of volatility and a lot of high moving assets, whereas after that it tends to trail off. This is because the institutional banks, around 4 o'clock UK time, have their lunch break. This is when they're not trading as much and they're not putting as big positions in. And by the time they're done with their lunch break, it normally means it's coming close to the end of the New York session, meaning the volatility is going to trail off anyway. So it's not worth it for me to trade after 4 p.m. GMT time. Now the best time I tend to find while trading is between 10 a.m. GMT and 4 p.m. This is purely because I like the volatility I get with the London and New York session. However, I don't want to get stuck in the noise on the first London Open, so I normally tend to avoid that. So that will be everything in today's video. I hope you found some use out of it and when you should be trading and trying to avoid to place trades. Thanks again for watching, and as always, I'll see you tomorrow.